This is Bloomberg Businessweek Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Businessweek Daily with Carol Massar and Tim Stenivek, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
And a very good afternoon, everybody, live across Bloomberg platforms. I'm Carol Massar. Tim, as you know, is off this week, and Norah Mulinda is in the house, someone you know so well to the Bloomberg audience. Of course, she keeps a watch on the equity markets. Good to have you here on a day where we've got stocks down, treasuries losing some steam after a weak $25 billion sale of 30-year bonds. We've had auctions throughout the week. Perspective, though, and I think about this, Norah, and I'm sure you guys talk about it on the earnings team and the equities team, is that the S&P, we've had about a 30% surge from those April lows. So if we see a little bit of a pullback, we have to have some perspective.
Absolutely. I mean, I think that when we think about the broader context, you look at last year, we had two back-to-back years of 20+% gains.
Off the charts.
Insane. So then we're here sitting in the situation where if you look back at New Year's and then you come back today, you just fell asleep in between. Feels like we're right where we were before.
I always love that concept. Sometimes I wish I had fallen asleep. No, I don't, because it's been interesting and fun. Hey, what we're going to get into over the next 60 minutes here on Bloomberg Businessweek Daily is who may follow Fed Chair Jay Powell. We're also going to get into what well-known company is the latest to be on President Trump's radar. And then we're also going to get into what stock is being rewarded by investors following earnings today and really for the year overall, and whose CEO will join us later on this hour. And then, Norah, I got to say, one of the things we talk a lot about is rare earths, and so we're going to dig a little bit deeper into that.
Lots to dig into there.
Yeah, we got a big earnings on that after the close. First up, though, let's get to that trading day, and let's check in with Amy Morris in for Charlie Pellet.
All right, thank you, Carol. Shares in Firefly Aerospace are up 45% in their public debut. The stock trading right now around $62 per share. The company's public offering raised $868 million and gives Firefly a fully diluted value of roughly $10 billion. A rally in stocks sputtering near all-time highs. Checking the markets all day long now at Bloomberg, and we are in the red now. S&P 500 down 0.2%. NASDAQ is pretty much flat. The Dow is down 0.7%. The 10-year Treasury yield at 4.24%. The 2-year yield at 3.73%. Intel shares now down 3.5%. This after President Trump called for the chipmaker's chief executive officer to resign, posting on Truth Social that, quote, "The CEO of Intel is highly conflicted and must resign immediately." Now, Republican Senator Tom Cotton asked CEO Lip Bhutan to answer questions about ties to China. The average rate on a 30-year mortgage has fallen to 6.63%. That's according to Freddie Mac, who says it is the lowest level since April. Atlanta Fed President Raphael Bostic says he still views one interest rate cut as likely this year. He says there are reasons to be skeptical that inflation caused by tariffs will be temporary. And he says tariff levels keep changing, which is just taking more time for consumers to worry about inflation that could lift inflation expectations. AT&T working with advisors to sell its Mexico unit. Sources say the company wants more than $2 billion for the business, which has struggled for more than a decade to gain ground on Telcel, part of a group controlled by billionaire Carlos Slim. Shares of AT&T about 2% higher. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris. That's a Bloomberg Business Flash. Let's go back to Bloomberg Balance of Power with Carol Massar and Norah Mulinda.
Amy Morris, thank you so much. All right, semiconductors definitely on our watch again for a few reasons. First up, late yesterday, President Trump mentioned amping up tariffs on the space.
We'll be putting a tariff on of approximately 100% on chips and semiconductors. But if you're building in the United States of America, there's no charge, even though you're building and you're not producing yet in terms of the big numbers of jobs and all of the things that you're building. If you're building, there will be no charge.
All right, that, of course, was President Trump yesterday. And then this morning, the president called on the chief executive officer of Intel, Lip Bhutan, to resign because of what he called conflicts of interest, adding to the challenges for a company that is supposed to anchor restoration of the U.S. semiconductor industry. Here's what the president put out. He said the CEO of Intel is highly conflicted and must resign immediately. He was doing this, of course, on Truth Social earlier today. He went on to say there is no other solution to this problem. Thank you for your attention to this problem. Now, this comes after Republican Senator Tom Cotton asked the chairman of Intel's board this week to answer questions about Intel's CEO ties to China specifically, including investments in the country's semiconductor companies and others with connections to the country's military. As we mentioned, there's a fair amount of stuff going on. So let's get to it. A look at the Intel CEO. We wanted to talk to someone who has followed this company for a long time, knows the current challenges, and knows the executives certainly in the space. With us is Bloomberg News U.S. semiconductor networking reporter Ian King. He's out there in our San Francisco studio. First of all, Ian, thank you so much. You know this company so well. You know what they're facing. You understand the executives who are there. I mean, Intel, we know, is a critical piece of Washington's efforts to rebuild the domestic semiconductor industry. I want to start with you, first of all, and we ask you this a lot. I mean, Intel, even with its struggles, is still a very important company, certainly to the United States.
Yeah, absolutely. If you want this country to be domestically capable of producing technology that leads this industry, the vehicle has to be Intel. There's no other company that's even close. Yes, they are not what they were. Yes, they have stumbled, but they're still the best if you believe in the necessity of advanced semiconductor manufacturing in this country.
So how are you perceiving this new added pressure here? I mean, has the CEO had enough time here to really turn around and really show a turnaround story here?
Yeah, I mean, I think what you have to do is look at what has changed. I think that you've gone to the heart of the matter there. He's only been in the job 4 months. 2 years ago, the House Committee on China asked him questions about his history of investments in China. So none of this kind of association with China is new. That's just not new at all. What is new is that Intel recently, during earnings, cast doubts on whether it'll build the plants in Ohio that everybody's looking at as a cornerstone of chip manufacturing in the US, that it'll be very measured in its introduction of new chip technology. That has obviously created an undermining of this story of bringing back chip manufacturing to the US and sort of making the US great again in that particular area. So clearly that has caught the attention of politicians, and clearly they're not happy with the direction that that's going in. And obviously we're now seeing some kind of a backlash, and that's focusing on the CEO of Intel.
Well, and I think it's kind of interesting, Ian, that this comes one day after we saw Apple CEO Tim Cook in the Oval Office with the president talking about investments in the U.S. and seemingly, at least some were weighing in on this and saying this is a way of getting some of the heat off of Apple, right? Is this potentially about the Intel CEO kind of not kissing the ring here?
Yeah, I mean, we've seen Jensen Huang from NVIDIA, we've seen Lisa Su from AMD, and pretty much all of the chip CEOs at some point making an appearance in the White House or at various events where the president or senior administration officials have been. So that's clearly been a policy that has, blossomed, shall we say, in the chip industry. We have not seen Lip-Bu-Tan make any appearances at any of these type of events. But to be fair to him, he's only just got the job, and he's apparently taking 20-odd meetings a day trying to figure out what the heck is wrong with Intel and how to fix it. So you pick your poison here in terms of what he should be doing.
Right. And as investors, you probably want him focusing on doing what he needs to do at the company. The stock, though, we should point out, is down about 3.7% today and down just shy of 2% year to date here. If the president, though, is coming at you hard, Ian, what does that do to your turnaround efforts? Does it kind of spread you a little bit?
I mean, that's what we need to know. We haven't seen a response to this latest message from the president from Intel yet. We've been trying hard to get one, and we haven't seen one appear anywhere else. So you have to believe that that means that they are thinking very carefully and in a very measured way about how they respond to this. We've seen conjecture, well, is this the end for Lip-Bu-Tan? What does this mean for Intel's turnaround? All out there, and clearly more uncertainty is not what Intel needs right now. We need signs that they're moving forward, and this clearly does not help.
So Earlier on, we actually had Republican Senator Tom Cotton adding pressure, saying the chairman of Intel's board earlier this week, he was asking questions about Tan's ties to China. And of course, we know that the U.S. is really focused on those national security concerns. Of course, Intel did say that they are committed to national security. But can you just speak to what some of those barriers are and what some of those headwinds, essentially, what are the flags that a lot of this industry is dealing with as it pertains to national security here?
Yeah, I mean, semiconductors have become the absolute central tool that the U.S. is using in its increasing geopolitical rivalry with China. Semiconductors are considered, because they are absolutely essential to technology that you would use to develop either economic strength or military strength. And that has only increased in focus with the emergence of AI as a viable tool for any number of different uses, including military. So depriving China of advanced semiconductors or the ability to develop them themselves has become a number one priority, or very close to the top priority in, for this administration, for the previous one. So anything that talks to that is a very much a political hot potato, and will come acutely into focus and be used by politicians depending upon what it is they want to achieve.
Yeah, and a hot potato and sometimes conflicting signals is what some might say in terms of protecting this industry here in the U.S. and also putting some pressure. Ian, thank you so much. Busy day for you, and so glad we could get some time with him. Ian King, he's Bloomberg News U.S. semiconductor networking reporter. All right, Intel on the president's mind, so too is who might be the next Fed chair. This as Fed Governor Chris Waller is emerging as a top candidate to serve as the central bank's chair among President Trump's advisors as they look for a replacement for Jay Powell, at least according to people familiar with the matter. Governor Waller told our Bloomberg surveillance team in mid-July that he is open to taking the top job at the central bank.
Look, in 2019, the president contacted me and said, would you serve? And I said yes. If the president contacted me and said, I want you to serve, I would do it. But he's not contacting me.
What say if he does?
If he says, Chris, I want you to do the job, I'll say yes. But he's not talking to me, so that's it. It's a hypothetical.
It's a hypothetical right now. Fed Governor Chris Waller and Bloomberg Surveillance back on July 18th. Let's get a reminder of who he is, where we are. Bloomberg TV and Radio International Economics and Policy Correspondent Michael McKee back here in studio. All right, Mike, Waller's already on the Fed board. So if he became the next Fed chair, help me understand how the chairs are rearranged or what it all means.
Well, that would have the least effect on the chairs that the chairs sit in and everybody else around the board table. Because he's already on the Fed, the president could nominate him to become chairman when Jay Powell's term is up in May. And he would have to go through confirmation as chair. But he's already been confirmed as governor, and he's already so therefore, most all of the paperwork that he would have to submit, it might have to be updated. But given the fact that he's a federal employee and on the payroll, he's probably not made a lot of complicated investments in the meantime, and he probably doesn't need to do divestiture and all those other things that nominees would have to do. So he could be confirmed fairly quickly and be able to take over when Powell's term ends. It's also possible he could be confirmed ahead of that time. And
is he a logical choice?
He's the most logical choice from the market's point of view.
Okay.
The other day I was having a chat with Mohamed El-Arian, and we were talking about who should be the favorite, and he said the person who moves the long end of the yield curve the least. And that would be Waller. And you saw after our Saleha Mohsen's story on this that the yields at the long end came down today. And so the markets, I think, would be very reassured by having somebody who has been on both sides of the hawk and dove line, depending on the status of the economy. And that's the way he would look at it now.
So he's data dependent.
Yes, he's data dependent. But the thing that the White House is saying, White House officials are saying, is he was able to make plans for what he thinks should be done based on a forecast.
Okay.
He thought that inflation would be a one-time thing and that the economy was weakening, so he called for a July rate cut. And the others have been saying we need to see more data until we're certain we can do this. And apparently that caught the president's eye and people in the administration's eye, and they like that about him.
Mike, there's been so much going on. I'm sure people are struggling to keep up. Please remind us of who the other names that are being floated right now are.
Well, there's supposedly 4 candidates, but there are 3 names. So one is Waller, of course, and then you have the people that the president calls the Kevins. Kevin Hassett, who is the director of the National Economic Council, and Kevin Warsh, who is a former Fed governor who has moved into the hedge fund world and is also does some teaching out at Stanford. And so those 2 have been variously thought of as the favorites, and Waller was thought of as sort of the insurance policy. But now, if he is indeed the favorite, that will change the dynamic for the president, who can then look to put somebody in the seat that's being vacated tomorrow by Adriana Kugler, who doesn't have to be chair. And it also makes it much more likely that Jay Powell would resign from his board seat when his term as chair is up. If the president appointed somebody that Powell thought would be a bad chairman, then he might be inclined to stay on.
So this is what I think is interesting, right? I mean, Fed chair is obviously the Fed chair, right? And that's a super important position, but it's a Fed board, right? And there's a discussion. And so I'm just curious about how you are thinking about what the composition of this Fed board might be post a Jay Powell.
Well, you make the important point that there are 12 voters, there are 19 members of the Open Market Committee, which include the 7 Fed governors and 12 presidents of regional Fed banks. And for any particular meeting, 12 of them are voters. So you've got to convince a group of people to go in a certain direction. It's not just that the chair can decide what's going to happen. Now, that was certainly the dynamic under Alan Greenspan, but we've gotten way away from that now. It's much more consensus driven. So just changing the chair isn't going to make necessarily a difference, and changing it to Chris Waller wouldn't make a major difference, except that he has advocated at this point cutting interest rates. So the president can see him as more likely to do it. But I think any one of the 3 that they're talking about would advocate cutting rates when they got in. But also remember, we're talking about May of next year. And who knows what if they start cutting in September, they may have already cut a number of times, and it may be time to do something else. So it's kind of hard to say exactly what it's going to mean.
Well, we heard from Mary Daly, and she said that policymakers need to prevent further deterioration in the labor market. Of course, we know we got that weak jobs report last Friday and other economic data that people are still parsing here. But she said that if the labor market stumbles, it falls, and it falls quickly, and it falls hard. So you don't want to get into that situation. And she essentially was kind of saying that maybe we should kind of start thinking about some rate cuts heading forward. Is there more of a resounding sense of urgency right now to get a rate cut done this year, no matter who's put in as Fed chair?
I would quibble with the word urgency, but since the jobs report, everybody on the Fed who has spoken has basically embraced the idea that it is probably time to do that. We heard from Neil Kashkari yesterday. We heard from Mary Daly. We heard from
I love when the blackout period is over.
Susan Collins and Elise Cook. They all said the same thing, basically, is that it does look like inflation is going up a little, but not too much, but unemployment is starting to worry us.
I always think about, as Waller's name in this case is being talked out a lot as maybe the possible next Fed chair, how is that maybe impacting his relationship with Fed Chair Jay Powell? How are you thinking about
I think that would be one of the easier relationships to have, because they've worked together now for 5 years and been, very cordial to each other. And Waller is seen as an intellectual heavyweight on the Fed. And it's not like he's going to get Powell fired. I mean, Powell's term is up, so he's going to leave. So I think the chair would be happy with this choice, especially compared to some of the others he could get.
Great stuff. And we should remind everybody that coming up later this month, check out our live coverage from Jackson Hole. Mike will be there. We'll be on the ground in Wyoming to cover the Kansas City Fed's annual meeting, and remarks from Chair Jay Powell. It all starts Wednesday, August 20th. All right. Thank you so much, Michael McKee. Coming up next, we're talking rare earths. Really important and important earnings after the close.
2:21 on Wall Street. I'm Amy Morris as we continue to watch Firefly Aerospace stock. Its IPO debut today at $70 per share, now trading at around $64 per share. A rally in stocks sputtered near all-time highs. Treasuries lost steam after a weak $25 billion sale of 30-year bonds. We do check markets for you all day long here at Bloomberg. Red across the screen. The S&P 500 down 0.5%. NASDAQ down 0.3%. The Dow now down 0.8%. 10-year Treasury yield at 4.25% and the 2-year yield at 3.73%. Fed Governor Christopher Waller emerging as a top candidate to serve as the central bank's chair among President Trump's advisors. They're impressed with Waller's willingness to move on policy based on forecasting and his deep knowledge of the Fed system. Peloton projected a sales decline for the current quarter and said it would cut jobs, but expressed confidence in a turnaround plan under new management. Peloton shares down now more than 1%. For on-demand news 24 hours a day, subscribe to Bloomberg News now wherever you get your podcasts. I'm Amy Morris. That's the Bloomberg Business Flash. We go back to Bloomberg Businessweek Daily with Massar and Norah Mulinda.
Lovely, lovely. Amy Morris in for Charlie Pellet. All right, well, this week, GM, General Motors, signed a deal with Texas-based Novian Magnetics to secure rare earth magnets for its full-size pickup trucks and SUVs. So this is the third domestic supply contract the automaker has signed related to the critical trade dominated by China. You might recall last month, Apple struck a $500 million deal to buy rare earth minerals from MP Materials. That's the U.S. producer that secured backing from the Pentagon. That company, by the way, reporting after the close. We're talking about rare earths a lot, and with good reason, especially considering the world's dependence on China for rare earth permanent magnets. And we know that this has been certainly part of the trade conflict between the U.S. and China. So let's get to it. A great roundtable with us. Back with us is Dr. Gracelyn Baskaran. She's director of the Critical Mineral Security Program at the Center for Strategic and International Studies. She's out there in our D.C. News Bureau. Also here in studio is Bloomberg News economic statecraft reporter Joe Deaux, who understands and is constantly explaining the space to us here at Bloomberg. He's right here in our studio joining Norah and myself. Hello, everybody. Dr. Baskaran, great to have you here again. You know, remind the world just why this is so important, who really has them, what the U.S. wants, and is the U.S. making the right moves to expand their presence when it comes to rare earths?
Thanks, Carol. It's great to be back. So the first and foremost is in April this year, China rolled out restrictions on heavy rare earths. And what this did is it put a chokehold on the industry because all of a sudden we had a supply chain disruption. And the automotive industry was particularly hard hit. Within 8 weeks, we saw that Ford actually had to pause production of its Explorer model owing to these supply shortages. What the U.S. did in response was a full-out effort to warp speed access to these rare earths and these magnets. Most recently, we saw the Department of Defense make a $400 million investment in MP Materials, essentially putting the U.S. government as the biggest shareholder to accelerate production, both of the rare earths and the permanent magnets.
Yeah, we've talked about that, which was kind of got all of us like, wait a minute, is this now a state-owned entity? Joe, come on in on this.
Yeah, I mean, this investment that we've talked about now for a few weeks, right, was a signal to the market. I think that was kind of the main thing. It was a signal to the market from the Trump administration, from the Defense Department, that the United States was serious about a mine-to-magnet supply chain. They were also signaling the real concern that the United States has over the fact that China has put in these export controls, as Gracelyn points out. We'd seen rare earths as export controls starting back in 2023. The difference maker here was the magnets. And that's why companies like GM came out and publicly said, the magnets are a problem, we're short, and we're having to stop production. So we now have a situation where MP Materials has been given a $400 million investment, equity investment by the DoD, loan financing to become a magnet producer. This is a miner.
So problem solved?
And problem.
I'm just being silly.
Right, exactly. Problem. Right. And actually, that sarcasm is very much the conversation I have heard constantly now for the past few weeks in the market, which is in anything in manufacturing is hard because just because you say you're going to build a plant doesn't mean the plant will just come together and work straight out of the gates. And I think there are questions among many in the market of this mining company. Can they figure out how to produce so many magnets at scale in the time needed?
So listen, you brought us Gracelyn. You ask her something.
So my question is, I mean, Gracelyn, you're sitting here now weeks later after this announcement. What do you think?
We're giving all the right signals in from both a supply and a demand side intervention. You know, a lot of what this MP materials deal with Department of Defense was it was supply side. It was saying we need more rare earths and we need permanent magnets. What this new big announcement from General Motors is really telling us is they're also giving the demand signal by agreeing to offtake. Joe, we've talked about this before, but one of the difficulties is the price environment. Prices are generally pretty low. By stimulating demand and showing that there is an off-taker, what we're really saying is that we are meeting a market need, and that's a really positive signal. General Motors as a whole has had first mover advantage on a number of deals related to this. We saw them with the MP Materials deal. Now we see it with the Novian deal for the magnet. So really it's showing that it is a full mine-to-magnet effort if we want to reduce our reliance on China.
Do you think now that we're showing there's commercial market for this, commercial demand, as you're saying, are we now in a show me moment? Like, prove it that you can actually deliver these magnets?
Absolutely. We've already seen that Novian Magnet is already making their first magnets, and they were delivered last month, which is a really great first step. Now what we need to make sure that they can do, along with some of these other magnet efforts like MP Materials' second production facility, is to make sure that we can ramp up at a level that is quick enough, because we know that whatever trade agreement is reached with China is still transitory and time-bound, and we could have future disruption. So we now need to make sure that we can ramp up fast enough.
Can we? In your view? As Joe said, none of this is easy.
Yeah, I mean, I think that there is enough market pressure to do it. You know, I was always reminded that during the COVID-19 pandemic, we developed a vaccine for a virus that we didn't know existed in less than a year. America's strong suit is innovation when under pressure. And I think what we've seen from the amount of government support, but also the way that we have embraced that challenge from a private sector point of view, that we are well on our way to being able to do that.
I mean, China controls over 60% of the global rare earth mining and more than 85% of processing capacity. And of course, we know that the U.S. really sees rare earth independence as essentially a security concern. How does the U.S. fit into all this? I know you mentioned that you do think that we have a stake in the game, but let me know to what degree.
So I want to take you back to actually 2007 and 2008 quickly, when our auto industry started collapsing and we saw significant bailouts to the automotive industry, given the impact on jobs and investment in a really important sector to the U.S. economy. We have skin in the game to ensure that our automotive supply chain does not have disruptions, because we know what the economic consequences, not just in the Midwest, but to the entire country that relies on it. So when we think about it through the lens of the economic health of our country, as well as importantly national security, given that magnets are used in a variety of defense technologies, we have every incentive to get this right.
Gracelyn, what's your biggest concern, though, moving forward? I know you're optimistic, but what do you think is going to be the biggest hurdle actually making this happen?
Can we do it fast enough? I mean, a lot of these things are very, very small scale. You know, in MP Materials' first year, they're actually only going to make 1% of the amount of permanent magnets China made back in 2018. So the ramp up will take time. And given the risk to further disruptions, the big question is, can we do it fast enough? And that's really difficult to to be able to say that now.
We're talking with Gracelyn Baskaran, Director of the Critical Mineral Security Program at the Center for Strategic and International Studies out there in our Washington News Bureau. Our own Joe Deaux is also with us, with Norah and myself. Hey, one of the things, Gracelyn, I wanted to ask you is, how important, though, is this market for China and their economy? And if the U.S. is backing off, who does China then start talking with to do deals? And are we starting to see signs of that?
China's economy is already struggling. We saw this past year they had the highest levels of deflation in modern Chinese history. Economic growth has really slowed. The IMF has actually flagged a number of these trade risks as a really big economic risk that China is facing. Anytime you have a new players coming on, because remember, it's not just the United States. We have countries like Saudi Arabia, Australia, and Malaysia are also going to bring facilities online in the next couple of years. This is a significant risk to China's future, because they've relied on supplying the entire global economy until this far.
So could we have a glut in a few years? I mean, I know they're called rare earth, and we've already debunked that, but could we have a glut essentially in a few years, or impossible?
That's a real risk we have. The reason a lot of mineral prices are actually quite low, like lithium is down 85% in 3 years, nickel is down about 80% in 3 years, is because there's oversupply on the market. Oversupply is a real risk, and one that the market hasn't really conditioned itself to understanding if we get to a point where we have far more than we need and prices get pushed down further.
Talk to me about what this means for a lot of those technology companies when we think about rare earth materials. How does this impact something like the likes of Apple, for instance, and iPhones?
So, I mean, technology firms need rare earths across the board, and that's part of why Apple signed this deal. And increasingly, companies are willing to pay a premium to not be reliant on China because they saw that manufacturing could come to a grinding halt in the instance that China wants to roll out these restrictions. So generally for tech firms, they'd rather have too many options to buy from rather than not enough.
Gracelyn, I think one of the questions I have is, when you're looking out 2 years, 3 years from now, where's the investor class on this space? Do you feel like, yeah, great, we're seeing some offtake agreements, there's real commercial interest, but at some point the rubber's going to meet the road, and the question will be, where are the investors going to sit?
The investors are really going to be a couple of different sources. So given that rare earths and permanent magnets are used in virtually every sector of the economy, a lot of these investments are going to be made by off-takers. So we have seen already General Motors, really probably, and Apple being really signs of what is to come going forward. We expect to kind of see these deals being cut across the economy, particularly with President Trump's recent announcements, for example, on semiconductor tariffs, right? Which is really an effort to incentivize sourcing here in America. So when you kind of add up the aggregation of efforts ranging from tariffs to supply side intervention to stockpiling, which was part of the new Budget Act, it's really a full-throttled effort to ensure that we are sourcing from America for American companies.
Hey, last question, Gracelyn, before we wrap. We do have MP Materials reporting after the closing bell. As I mentioned, stock's up almost 350% year to date. It's up another 4.3% in today's session. What are you watching out for? And just got about 30 seconds.
I'm looking to see how fast MP Materials can deliver. The amount of support MP Materials has gotten is absolutely unprecedented, and now they have the significant task of being able to scale up quick enough to meet both our national security and economic security goals. So I want to know how fast they're going to deliver on the very high expectations that the U.S. government has placed before them, as well as industry in this country.
Okay, whenever I talk with you, I always want to just take a class on rare earths, but you have to be the professor. I'm just going to put it out there. Dr. Gracelyn Baskaran, thank you so much. Director of the Critical Mineral Security Program at the Center for Strategic and International Studies. And same thing, I'll take a class with you anytime, Joe Deaux. He is Bloomberg News economic statecraft reporter, a must-read here at Bloomberg. All right, coming up, we're switching gears and we're talking taking care of pets, big business. We're going to get into one company whose share price is definitely on the move to the upside today. We're going to talk with the CEO of Elanco Animal Health. That's coming up next. This is Bloomberg Businessweek Daily.
It's 2:40 on Wall Street. I'm Amy Morris. Shares in Firefly Aerospace were up as much as 40% in Firefly's IPO debut. That debut saw $70 per share, now trading at about $62 per share. Concerns over an overheated market have surfaced, analysts noting that the current environment is vulnerable to pullbacks caused by headline risk. And we check markets for you all day long here at Bloomberg. The S&P 500 down 0.4%. NASDAQ down 0.25%. The Dow is down 0.75%. The 10-year Treasury yield at 4.24% and the 2-year yield at 3.73%. OpenAI is rolling out a new artificial intelligence model called GPT-5. It's designed to be more capable at coding and creative writing, as well as reasoning through complex queries. OpenAI Chief Executive Officer Sam Altman called GPT-5 a major upgrade from the company's prior AI models. And Elon Musk posted on X that xAI's Grok 5 will be out before the end of this year. Atlanta Fed President Raphael Bostic says he still views one interest rate cut as likely this year. He says there are reasons to be skeptical that inflation caused by tariffs would be temporary. And he says the tariff levels keep changing, which is extending the time that consumers are worried about inflation, and that could wind up lifting inflation expectations. It's also getting harder to find a job. New data from the Labor Department show recurring applications for unemployment benefits jumped to the highest level in years, a sign that the labor market is weakening. New claims have remained subdued. That's something. Initial claims rose to 226,000 last week, a little higher than what economists expected. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Amy Morris. That's a Bloomberg Business Flash. Back to Bloomberg Businessweek Daily with Carol Massar and Norah Mulinda.
All right, so appreciate it. Amy, thank you so much. Well, out with earnings earlier this morning, the stock is soaring. We're talking about Elanco Animal Health hitting a 52-week high today. It's up about 33% year to date. The gain, as I look at my Bloomberg, it's up about 16% in today's session. Again, as we mentioned, reporting earnings this morning, it boosted its adjusted earnings per share and revenue guidance for the full year, following better than expected second quarter results. We wanted to know more about the business and hear about the outlook. Delighted to have with us Jeff Simmons. He is president and CEO of the $8 billion market cap company, Elanco Animal Health. He joins us from Greenfield, Indiana. Jeff, good to have you here. How are you?
Great. Thanks for the opportunity, Carol and Norah. Good to be with you today.
Well, I want to talk about the business. I want to start, though, when we've got a member of the C-suite, start big macro, high and wide. When you look at the market and business environment, it's been an interesting year. And there was a lot of volatility. There was a lot of uncertainty. It feels like some things have calmed down. We've certainly seen that in the equity market. But I'm just curious how you see the business environment today.
Yeah, I've pulled out the word volatile through my lens, and I see it dynamic. I think there's a mix of opportunity and challenge out there. But the backdrop that I come from, coming out of pharmaceuticals, but being in animal health for 35 years, I mean, this is an industry that's been growing. I think in the last 3 decades, only 1 year, 2008, we haven't grown. And we're seeing that resilience in the first half of this year. The animal health industry is probably one of the most resilient, and it's all around protein and pets. And you've got trends here that we're seeing, even with the dynamics that you've just mentioned, consumer spend and the volatile environments, we're seeing resiliency because of these trends. I mean, the pet owners of the future, they're adding pets to their home. Pets numbers are up. The globalization of pets, the willingness to spend on pets is increasing as kids numbers and children go down. Pets are going up, and we're seeing that in our results. And then on the protein side, this conversion of whether it's the new protein diets is also converging with our farmers and the dynamic. I mean, I don't know if you tried to buy cottage cheese lately or meat sticks. So those two trends are creating farmers, veterinarians, pet owners to have a resilience like I haven't seen. And, we've seen 8 quarters of accelerating growth, and we peaked here, after those eight quarters, not peaked, but we've hit a high on adjusted basis of 8%. So where I come from, I see this as one of the most resilient industries right now with some of the consumer trends that are out there.
I'm a dog family. I've had tons of dogs, 3 Dalmatians at one point. Right now I've got a Weimaraner and an Irish Terrier. So I feel you, I hear you. What I'm curious about is, in terms of growth at the company, what's growing top and bottom lines? Is it existing products? Is it really what's coming in the pipeline? And I'd love to have you talk a little bit about what your pipeline is like, because I've seen changes, certainly in that monthly pill we give the dog. I used to give them 2 different pills. Now it's 1 pill, and it covers a lot of what ails them and you have to watch out for. So give us an idea of what's really driving growth at the company.
Yes, I'll anchor to that. I mean, it's innovation, and farmers and veterinarians reward innovation. It's got to be valuable. This is a cash-based business, not a payer business. So you've got to add value. Vets make money off from this, and pet owners respond to it, and that's exactly what's driving Elanco. We have been focused heavily on a pipeline a few years ago with blockbusters in it. We brought it through approval. We're now well into the launches, and I shared today, 5 major products with blockbuster potential. That's more than $100 million of potential in our business, but all of them are in big spaces. So let's just go down through a few of them that you could relate to, and hopefully we can get your pets on them if they're not. The first one's Credelio Quattro. A $6 billion market is parasiticides. That's the flea, tick, heartworm. This is the first product the FDA has ever approved with 4 active ingredients. We give the broad coverage. We give the speed to tick kill that other products don't have, 1 month heartworm control. And what we're seeing is we've captured captured 14% share in just a few months into the marketplace. And it's a real opportunity. The market itself, this broad spectrum pill, is growing at 40%. And we're bringing what we believe best medicine into that. The second is, the number one reason people go to the vet is an itching dog. The dog can self-diagnose here for the pet owner. And we've got a portfolio coming, the first one into the market, and then we're globalizing it. We're launching Zenrelia in Europe. We think we've got a high efficacy product. We've now got over 50% of users that are using the product saying we're moving it to first line. That's a big deal for us. And sales more than doubled in the U.S. from Q1 to Q2. And then, I move over to the cattle business. We've got a couple products here that are actually helping with productivity on low cattle numbers that are out there. That's why beef prices are a little higher, but also having an environmental impact. And CPG companies are signing up to say, hey, this is important to the next generation of protein consumers.
All right, I have to ask, just because one of our producers is asking, and she's got a dog and a dog lover. She says, are these allergy meds for itchy dogs or a skin thing? Can you help us out there?
Yeah, so, atopic dermatitis, we're right in the heart of the biggest season, kind of July, August, September. This comes from, just on the same as the human side. But it's what we're doing here is we're actually with the products we're bringing is we're treating that problem. We're bringing that itch down and putting that dog back into a comfort zone where it's not itching. I have 2 Labradors, and I've had a Labrador that's been on many different medicines. And this product, Zenrelia, is actually working very well for those trouble cases, but it's primarily for atopic dermatitis.
All right. Well, Elizabeth and Pearl, thank you for that. A little bit of advice.
Jeff, Norah here, also a dog lover. My family, we're proud toy poodle owners here, but curious how you all are navigating the tariff environment right now, especially as it relates to the pharmaceutical space.
Yeah, so first of all, we have been very clear in the last quarter and this quarter that we have, put our interventions in place. We've done everything from, we've got the manufacturing, we believe, in the right place, and we've really mitigated, quantified, and actually quantified today $10 to $14 million. We've covered that in our guidance and really tested that against any risk scenario at all on tariffs. As you go to the bigger kind of maybe 232 and some of the discussions that are happening in pharma, we as an industry, all of us have been there, animal health, inside of Washington. We're being heard with a constructive dialogue to say, hey, we're really out of scope. Why? We're not a payer business. We're a cash business, which creates a very competitively priced global environment, which takes us out of scope. But ultimately, this comes back to what I just talked about. This is about, we are about food, security, food affordability. We're about the American farmer, and that's what animal health does for veterinarians and pet owners. So at this point in time, we believe we're in a good, constructive dialogue, that we're being heard, and we will, we have a plan to be out of scope relative to pharma because our industry is so different.
Well, it is a different industry, and I love that you went there. What is it that maybe Bloomberg investors, Bloomberg audience doesn't understand maybe about your supply chain? Where is your supply chain?
Yeah, the big companies are American-based in our industry. That's one. And we primarily got manufacturing between Europe and the U.S. We have very small percent, I think, as an industry, 2 to 3% coming out of China with active ingredients. So that's one. But I think where the discussion goes is economics and pricing, which gets you into this situation. And again, when we don't have as much patent protection, we have a lower margin industries and customers, and it just creates a global competitive price base, especially when you don't have payer, you really don't have an insurance base in pets or farmers.
So, Jeff, does this mean you don't want to get caught up in the bigger, broader talk about the cost of pharmaceuticals?
That's absolutely right, because we're more probably food-based and farmer-based type products, and that's why we've got tremendous broad-based support from the veterinarian community, the farmer, the food community, because that's what we are. I mean, we're direct to consumers. We're supplying products that impact their homes, whether that's protein or whether that's their pets. And again, the cash market versus a payer market is a big deal. So the message is, yes, we are outside of that scope. Another reason it brings the resiliency. I mean, this pet and protein trend is creating a resiliency that I think for your viewers is why this is such an attractive industry, and our last 30 years prove it. And I think Elanco, where we are relative to value, is a great company inside of that industry.
So what about the White House wanting new drugs to be launched at prices equal to the ones in Europe or elsewhere? Where do you all view on? What's your view on that?
Yeah, I mean, I would say back to the out of scope is, we're a regulated industry. We bring products through, but we go right into the marketplace where we're not looking to get on a formulary or there's no insurance. I mean, this is where we have to go right out on day one, like I'm doing with these new products, and I need to prove a value proposition to you, the pet owner, as well as to the veterinary practice, or I'm going to farmers and need to say, the only way something works with farmers is it's got to be competitive. So I don't bring an innovation to the market if it doesn't add value immediately, and then I've got to be competitive, whether it's an American farmer versus a Brazil farmer. I mean, that matters too. So to me, it's a very different marketplace, which causes the reason why, we believe strongly we're out of scope of those tariff situations.
Hey, before we wrap, one thing I'm curious about, Jeff, because I love talking with anybody in the drug-related space, but I'm always curious about what drives innovation. What drives innovation when it comes to pet pharmaceuticals, be it for farm animals, be it for my dogs or Nora's puppies? What drives it? Is it cost? Is it efficiency? Like, what is it?
Yeah, first of all, there has to be a need. Back to the marketplace. Okay. We have to add value. There's a lot of products that have been designed, a lot of good ideas, I say, that never really become innovation because they don't hit value. I have to, I'm going to use Credelio Quattro. This product, brings 3 to 4 points of differentiation right out of the gate that I can come to you. Hey, I can give you the broadest coverage. Mm-hmm. I can give you quick, tick kill right away. These things matter to a farmer. Hey, I need to start talking dollars and cents right away to the farmer. It's the only way an innovation works. So that's we do that 7-8 years in advance as we move this thing through the pipeline, saying, hey, how will this be different? We don't bring a product in Elanco to the market if it isn't best in class or it's first in class and it's got differentiated value. And we have to price it that way right out of the gate as well, which I think substantiates my point. Mm-hmm. And back to, again, the significance of what I think is a really attractive industry right now with maybe some of the volatility out there, to your questions, animal health. And again, our history's shown it. Our last 8 quarters have shown it. We've raised our guidance, and we look forward to not just 2025, but the rest of the decade. Yeah. Elanco's set up really well.
I will do anything for my Scout and my other dog, Yak. I'm just going to say, do you have a dog? Most important question. Final question.
Absolutely. 2 Labradors. I think I've been through about 4 generations of Labradors.
Classic.
And, like the waters. Absolutely. Lily and Lakin.
Lily and Lakin, love that. Hey, Jeff, thanks for carving out some time for us. Jeff Simmons, he's the president and CEO of Elanco Animal Health, joining us on this Thursday. That stock, by the way, up 16% in today's session. So talk about some outperformance. All right, I'm Carol Massar, along with Norah Mulinda here on Bloomberg Businessweek Daily. We want to get into some of the stocks on the move today. Here to do that is Bloomberg News Deputy Team Leader for U.S. Equities, Jess Menton, in our studio. All right, good to have you here. So let's start with Paycom. What are we seeing?
So this is a software cloud company that works more in the payroll and HR space. So some of its rivals are Workday. So Paycom is in the S&P 500. The ticker symbol is PAYC. So it actually jumped as much as 12% earlier this morning, gave up some of those gains, but still actually up close to about 4% right now. So I wanted to point that out just because it did boost its full year revenue forecast. And this does tie to AI because it was driven by artificial intelligence demand. So obviously, not just when you think of those tech and growth companies when it's an AI story, but also when it comes to payroll and HR software providers there. And I wanted to point out too, because when you're looking at that stock, it actually was trading around right now close to $231. It got close to resistance from a technical perspective around 243 earlier today. So that was actually dating back to its December high. So that might be some of the reasons why we saw it pull back a little bit there. But A&R function, if you want to look at the sell side targets there, there's 4 buys, 15 holds, and 0 sells.
Wasn't it the number 1 gainer in the S&P at one point?
It was.
Near the open,
yes,
right?
it was. And so and now it's
I had to look it up because I didn't recognize the ticker.
Exactly.
And it's, again, these software companies that are outperforming.
Right. And it was added to the S&P 500 actually a little bit more than 5 years ago in January of 2020. So it is indeed in the major index.
Up about 14% so far this year. What else are you looking at?
So I'm going to move over to the decliners to date. It's the 2 worst performers in the S&P 500. So I'll start off first with Fortinet. FTNT is this ticker symbol on this, down 25%. So this would be on pace if it holds through the close. Its worst day since November 2009. So when you're thinking about cybersecurity and also some of its peers,
that
Datadog,
was a really bad time, November 2000.
Exactly. So to go that far back, and it's the worst performer in the NASDAQ 100 as well. So it gave an update to its firewall refresh cycle. The problem was it wasn't as good as what sell-side strategists, shareholders, and investors were anticipating. So really, it was supposed to be this opportunity to update or renew that type of IT infrastructure. But that, unfortunately, the product growth, the estimates were declining there. And so that's why you're seeing it getting pummeled. On the sell side, though, William Blair, analysts saying they're not seeing strong product revenue growth and billings materialize right now. And then, of course, Bloomberg Intelligence's own Mandeep Singh was pointing out as well that Fortinet is unlikely to see any big profit lift from its product refresh cycle. So you all are seeing those peers like Datadog, of course, one of Tom Keen's favorite. DDOG is the ticker symbol on that, down more than 4%. And then also looking at Palo Alto Networks, PANW is the ticker, down 4% as well.
Let's talk Eli Lilly, ticker LLY.
Despite her green blazer,
I know.
Coming in with some decliners.
I know. There she goes.
I know. I unfortunately poured the cold water on it, but I had to point out because
but it's been on such a tear year after year, but a different tone today.
And this is the second worst performer in the S&P 500 behind Fortnite. So when you're looking at this stock, the ticker symbol LLY, down 14%. On pace, and I had to double check this, on pace for its worst day since August 2000.
Wow.
It is pretty wild there. So on the flip side of that, if you look at its rival Novo Nordisk, if the US listed shares here, NVO's the ticker symbol, actually up 7% because they're going to benefit from this. So if you're looking at Eli Lilly, of course, its outlook for 2025, top quarterly estimates, if you're looking at those types of drugs that we talk about so much with Mounjaro and Zepbound, those sales were actually soaring. But unfortunately, it was this study that they were doing that overshadowed some of the optimism when it comes to earnings. So it's experimental pill that helped patients actually shed roughly about 11% of their body weight in a late stage study. It just wasn't as good and as close to what its rival Novo Nordisk had done. Yeah. That's why you ended up seeing that pummeled. So you're seeing those two stocks diverge and go in different directions.
So we're moving from needles to pills.
Right.
That's the new transition here.
They're hoping.
Evolution.
I mean, Novo's having its own problems as well.
That's
It's just as we kind of transition through. Good stuff, as always. Jess Menton, thank you so much. For more conversations, be sure to check out our Stock Movers podcast, 5-minute episodes of the biggest winners and losers in the stock market. You can find Stock Movers, on Apple, Spotify, or anywhere you get your podcasts. All right, that's going to do it for our first hour of Bloomberg Businessweek Daily. Coming up in the next hour, we're going to get into, hey, it's a deadline, President Trump's tariffs, at least a deadline for some. So we're going to get an update on kind of where we are and also how tariff effects cannot hide themselves from consumers forever. And then we're going to talk a little bit about Russia, Ukraine, the United States. Is a meeting maybe happening? We're going to get the latest on that and what a deal might look like. Do not go anywhere. The close coming your way on TV, and Norah and I continuing on Bloomberg Businessweek Daily.